Greg, I'm wondering if I've got kind of two more questions for you as we wrap up. The last question, or second last question I want to ask you is really around kind of, I'm personally a little bit bullish on where I believe that Centurion can go. And at the time of this recording, we're in the spring of 2024, and we're kind of, I think, in my seat, that there are some exciting things right now in the pipeline or tailwinds for Centurion. What comments, or obviously you're not a GIC, but what kind of commentary might you add of why someone would want to jump in right now? Why would somebody get excited about being a Centurion investor today?
Look, I think, one of the things that I've been more than fairly critical of our central bank and our politicians, and that this hiking campaign was actually going to be pro-inflationary. Now, aside from the fact that we're the only central bank in the world that measures inflation, and by we increase interest rates on the mortgages, so that's inflationary. Okay, we're the only central bank country in the world that does that. But I noticed, and I said this would be the case, and I pointed this out on subsequent charts. So we tracked something called the market rent gap, right? So this is the difference between market rents today, which are accelerating still extraordinarily quickly, and the rents that are being charged to residents, right? And I said, market rents are going to explode, and that would be inflationary. And why was that going to happen? Well, if you make it more expensive for developers to build, well, guess what? They're not going to build, right? So supply is going to go down. If you're going to make it so expensive that people can't afford to buy, so they're not going to buy those condos. And to get a condo built today, you need 80% pre-sales. So if you can't, the developer can't afford to build it and someone can't afford to buy it, well, guess what? All those people are now going to get forced into rental, and that's exactly what we've seen. So if you look at a chart, and we publish this quarterly, and you look at our market rent gap, absolutely exploded the first quarter that they started hiking rates, and that's exactly what we said would happen. So today we sit at the largest gap we've ever seen in our history. So we're at about 41 million of market rent gap, which at today's capitalization rates is worth just short of $1 billion in market value. For us to, and what we have to do over time is to realize that, of course, but we've got a pretty good track record of realizing that over time. So there's a lot of what I would call gas in the tank. The other thing is, we believe coming into the fall, once the interest rates start getting cut, we've had a business where our focus for the last number of years has really been on the new construction apartments, and so we're kind of an earlier investor in this spot, and we have a business where we help finance developers, so debt and equity financing. We can lease it up, we can manage, kind of do the whole spectrum. So we've talked about for this country needing $3 or $4 trillion of housing, call it a third of that is apartments. So $1 trillion of apartments need to be built over the next 10 years. I mean, no mistake, we're not building anywhere near that number as a country, like not even close, right? But the opportunity set for us, not only on the portfolio that exists, but on the opportunity to create all this new housing, given how we've positioned the organization, I think is fantastic. So we're really excited about everything and on those fronts.
What a great news story, and certainly, as I think you guys have always maintained a wonderful third-party evaluation structure, and when assets are marked to market value as interest rates come down, I think there's also some tailwinds there as well, where your evaluators at due time can. I certainly see some really positive potential evaluations in the coming 12 to 24 months?
I think that that's true. I mean, cap rates went up last year, not as much as rates, but they did go up. Part of the reason why, like, people have this view that they move one for one, and they don't, because the rent inflation has been much higher than the interest rate inflation. So, you know, if not for the raise in cap rates last year, like that, the value of that was about $250 million, right? So if we'd not seen cap rates go up last year, you know, our returns would have been mid-teens, right? You know, we also make practice to borrow long term, right? So, but we don't mark up the value of those mortgages. So last year we ran it in the beginning of the fourth quarter, and if we had marked our mortgage liability book up, that would have been $330 million of positive NPV, which we didn't mark, but we marked the assets down by the cap rate. So I think we're very conservatively positioned for the next couple of years. And you know, what I would say is, it's certainly, in my opinion, you know, we're spring loaded for, you know, the turn in the market.
I love it. I'm going to put that in quotations. Spring loaded. I love it. Greg, last question then to you. And,
Sure.
Is just as we wrap up, if there's anything else that you wanted to highlight with the question of why Centurion? Why should a client invest and trust you with their money? Why Centurion?
Like, I think we've been doing this a long time. You know, I think we've proven ourselves to be able to deliver low volatility returns. You look at our track record, we published this, you know, the risk return matrix, and, you know, we're top left, right? With a third of the volatility. You know, and it's been steady Eddie, consistent growth, and never a losing year. I'm not saying that that's ever, you know, not like, I can't make that representation, but you know, I think we've been able to deliver, and I think we'll continue to deliver, and not in something that is very hard to understand. I think in many ways, you know, I can describe what we do in less than 2 minutes, and I think most people can understand what we do in less than 2 minutes. And you know, there's a lot of really funky investments out there. Very few of them are actually understandable. You know, so I think that you know, we'll continue to deliver for a portion of investors' portfolio, not only, you know, without taking an undue amount of risk, but I think we help for that, particularly for people who are a little bit concerned about being in an inflationary environment where they have very little control over you know, their ability to hedge that. And I think that's something we can help with.
Greg, thank you for being a part of today. It's such a privilege always to rub shoulders with you. Great to have you.
Thank you. I enjoyed being here.
As always, my door is open. Until next time on Money Match, thanks for joining us.